Okay, we're going to go ahead and talk about depreciation a little bit. First of all, the reason we don't have this involved a question by any means on the homework, but you might see something on a test or a final that might be similar to this. And what we're really doing in this question is I want you to see when they're asking for depreciation expense, when they're asking for accumulated depreciation, when they're asking for book value. A depreciation is really, it's different depending on which method you use. So we're going to go through each method separately and just let's look at each item and see what we get in total. So we're estimating, well, first of all, our equipment costs $60,000. We're estimating it's going to have a $5,000 salvage value at the end of its useful life, which is 5 years. When you're calculating depreciation, the three things you must have is the cost. If there is a salvage value, there could be a zero salvage value, but you have to know whether or not there is one. And you also have to know the useful life of the asset. So let's go ahead and record these items. First of all, straight line, you start with your cost, which was $60,000. You subtract your salvage value. In our case, it's $5,000. So that means our depreciable cost is going to be $55,000. So first of all, let's figure out what our annual depreciation expense is going to be. To do that, you simply take your depreciable cost and divide it by the useful life. In our case, our useful life is 5 years, right? So we're going to go ahead, take 55,000 divided by 5 years. So that means our depreciation expense each and every year will be $11,000. Again, this is for straight line. So we have an even amount of depreciation for each of the 5 years. Okay, so let's look. It asks us a couple things. First of all, what's depreciation expense at the end of December 2011 and December 2012? December 11, our depreciation expense is $11,000. Also, it's asking for us to compute the balance of accumulated depreciation at December 31st, 2013, in our book value, December 31st, 2012. So, first year's accumulated depreciation, $11,000. Again, that's for the year 2011. If you remember, depreciation expense, it's an expense account. It's closed every year. So this is only one, we're going to only keep track of this year by year by year. Accumulated depreciation is different. That's a permanent account on our balance sheet. So this will accumulate year by year by year, and we will have a total. So our accumulated depreciation so far 2011 is $11,000. Now let's go ahead and look. The next thing it wants is book value in 2012, right? Well, we need to accumulate our depreciation for 2012. It's $11,000 year after year after year. So 2012 we'll have accumulated depreciation again of $11,000. This, of course, is gone. It would have been closed. And in 2012, we have depreciation expense of $11,000. What's our book value right now? To determine that, we take our total cost, $60,000, and we subtract how much depreciation we've accumulated so far. So right now, at the end of 2012, we've accumulated $11,000 plus $11,000. We've accumulated $22,000 of depreciation. So our book value is $38,000. Next question is asking, what's our accumulated depreciation in 2013? Well, we're going to have to add one more year, right? It'll be $11,000 for 2013. Again, if we were to look at depreciation expense in 2013, it's only the 1 year, because of course we close our depreciation expense account each year, so it's only $11,000, but our accumulated depreciation over these 3 years is $33,000. So our accumulated depreciation as of 2013 is $33,000. The reason I'm doing this is because, as I said, you might see this on a test or on a final. You need to realize what the question is asking for. If it's asking for depreciation expense, it's $11,000 every year. If it's asking for